two things come to mind immediately. One is that the people in this country, or the markets rather, work too much in terms of the immediate information. It's what just happened, what's happening right now. It ignores the very big picture. I wonder, does the fact that the commercial banks are net long in the silver futures for the first time in a very long time has anything to do with these types of moves? Is this the beginning of a substantive move a lot of us have been waiting for, or assuming would have happened a long time ago? I'm not sure. But is the nature of this market where there is a piece of information that comes out like consumer confidence fell? Well, duh. You can see that we're in a period of time where there's strain on the consumer with inflation and higher prices, and, the economy is slowing down in a very big way. But is that enough to make silver go skyward? Question is, does the conventional wisdom, does that say, well, worse than expected consumer sentiment, so silver should go to the moon? In other words, is there something behind the scenes that is bigger than that information, or is that information kind of the cover to run for showing the positioning of the commercial banks in a very bullish stance? So I've been expecting this blow off, and I think it's going to continue to go higher, in my own opinion, based upon the positioning of where the most informed traders in the world are, and that is net long in futures. So yeah, whatever the reason is, I'm glad to see it. It's long overdue, and I would anticipate that this run is not over yet. I think it's just beginning.
Silver's price response to economic data and Fed anticipation. Silver prices have surged to a 4-week high due to softer U.S. economic indicators and expectations of the Federal Reserve's actions. Silver's performance and economic factors. Silver's recent peak is attributed to a weaker U.S. dollar and declining Treasury yields, fueled by reduced consumer confidence and economic uncertainty. Personal consumption expenditures and payrolls reports are anticipated to impact silver's path. Fed's strategy and market impact. The Federal Reserve's wait-and-see approach amid economic signals of U.S. financial weakness has influenced market sentiment. As the possibility of maintaining the status quo increases, silver investors approach the market with cautious optimism. Gold's rebound on dollar weakness. Gold's price rebounded to a 3-week high due to a retreat in the U.S. dollar. The dollar's decline followed lower-than-expected job openings, indicating labor market slowdown and questioning the need for further Fed tightening. Dollar's impact on gold and market movement. The dollar's decline led to gold's rise and crossed major levels. Gold's price action has been influenced by currency factors, making it a key player in dollar-based commodity movement. Don't forget to join us as we explore the unfolding events. Now let's continue our enlightening discussion with Andy Schectman.
Yeah, well, let's go back to 1980 first, when Volcker raised rates to, almost 19%. We also didn't have the debt burden that we did back then. So he had tools in his quote-unquote toolbox, enabling him to raise rates high enough to bring into effect the term Gibson's paradox, which is the inverse relationship between real interest rates to the price of gold. The real interest rates in the United States right now may be 1%. And that's if you believe the CPI gauge. I mean, we're very, very close to 0 or 1% in terms of real interest rates. But back in 1980, when the inflation measurement was actually fairly accurate, we had a real interest rate environment of, after he raised rates to 3-4%, which certainly was better. But the point of it is that we didn't have the debt burden that put the massive strain on the government. And when you can earn 18 or 19% and put it into treasuries with safety, the rule of 70 seconds would tell you in 3.5 years, you double your money. That would be the death knell for things like gold and silver that don't pay a coupon. When you look at 2011, you still had optimism in what the United States was all about. And when you talk about the growth of debt since 2011, I mean, look at the amount of debt and the amount of money printing that has happened just in the last 4 years. So I'm not saying we didn't have a substantial debt in 2011, but my guess is the national debt was probably somewhere between 17 and 20 trillion. And here we are right now with, 50% greater addition to the debt and accelerating. So the point I'm getting at is that the ability to mitigate the rise in gold and silver, which would really be the antithesis of the Western system. You know, the Western system has suppressed gold and silver forever to support the bond market, to create the illusion of strength in a dollar and in a system that perhaps was starting to show cracks. And in 1980, it was easy to brush off. In 2011, it wasn't easy, but it was easier to brush off than it is now, where you have an increasing debt burden, and as rates rise high enough, you blow up the entire system. So they don't have those tools in their toolbox anymore. And the fact that it is slowly, methodically rising, to me, is much, much, much more encouraging than something that goes straight up to the moon in a hockey stick fashion immediately, because those runs are typically never sustained. You want to see something slow and methodical that continues to build. And to your point, which is very, very, it's articulate, and it's also, the word I'm looking for is escaping me. It's very thought-provoking as far as I'm concerned. And, you know, it just shows that you're looking at this the right way. You're right. If you go back and look, you've never seen silver move in this way, where it continues to move higher and higher and higher and backfill and higher and higher and backfill. Typically, we see these massive spike moves, but I think it's more encouraging to see it this way. When you put into the equation that the commercial banks are now net long, now, does that mean that they'll be net long and that they won't short a rising price? That's really where the rubber meets the road, is that if the commercial banks do not short this market as it continues to move higher, then we know it's the real deal, because that's been their mantra. They're the only idiots. They're not really idiots, because they have enough money and they know what they're doing, to short a rising market. Typically, you short a falling market. Shorting a rising market tells me that they are trying to manipulate the managed money again. They hoodwinked the managed money into going very, very, very short. And when you look at the amount of silver that is literally disappearing off of COMEX and off of SLV, when you read the ETF, BlackRock, or the SLV ETF prospectus, and look at the note that BlackRock sent out a couple of years ago, they said, hey, by the way, you know, for all of you that decide to short SLV, there could become a time where you can't get the bars to cover it. And kind of a warning in the sands, if you will. We are entering a period of time where being short in this market is incredibly dangerous. So although we are seeing it move up and up and up in a methodical fashion, there certainly is that rocket fuel there that could push it higher. But this time, the question is, will they stop it? Do they want to stop it? And even if they do, how? You can't raise rates to stop it like Volcker did. And you know, in terms of what they did to the Hunt brothers, maybe they changed the rules. I don't know. I look at it as very bullish. To me, you want slow and methodical. You want the tortoise. You don't want the hare. The hare runs out of breath and flaps, just like we saw in 11 and like we saw in 08. We want a slow, steady base build that continues to build strength underneath it in an environment where physical silver is becoming impossible to get at that level. So I find it to be very encouraging, to be honest with you.
Robert Kiyosaki emphasized that despite the affordability of silver coins, most people still prefer to save counterfeit fake dollars. Who can't afford one silver coin? Nigerian central bank sued for dollarizing economy. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.